Guys, this is Melanie Hawk from Why Not Me Academy. Today we are all about insurance and insuring your Airbnbs and also your fix and flips properly. So if you're not in real estate, this might not be the perfect one for you, but if you're thinking about getting into it, it is a must, a must, a must. How to properly insure your rental properties, your short-term rental properties, and your fix and flips. Mike is an expert. He works in 44 states. He's awesome, awesome, awesome. I highly recommend him. We're going to start by talking broad with fix and flips, because even if you just run Airbnbs or long-term rentals, at some point you might need to do a renovation, and then this would apply also for that. And then we get more narrow with the how to handle short-term rentals, whether you run the ownership model or if you're arbitraging. So definitely check out this episode if you are involved in any of those or even thinking about it. Enjoy this interview with Mike Stelljes. Hey guys, this is Melanie Hawk. Welcome to Why Not Me Academy. Today I have Mike on with me, an insurance specialist. We're going to talk about insurance as a whole for fix and flips, but mostly for short-term rentals. So Mike, thank you so much for being here.
Thank you for having me. I really appreciate it.
So give us a little bit of background of what you do, what types of properties you handle, even though we're going to specialize in a certain niche, but give us all that you cover.
Okay. Yeah, just real quick. I've been in the industry since '93, so I've got 27 years of insurance experience. I've always dealt with contractors, home builders, in the construction industry from the beginning. Around 2010 is when I started specializing in new home building construction. So I really took a turn. At the time, I just felt like home builders were being taken care of, that they had the proper coverages. And that was the big reveal. I found that there were some gaps in the coverage. So I really started focusing on new home builders, and it just kept growing and growing and growing. And eventually I ended up in 34 states with 170 some builders. And then in 2017 is when I got introduced to Professor Anthony Moore with Pike Properties. And he was like, Mike, we're transitioning from the real estate investing into the new home building. And we really see a gap with the real estate investors. He goes, because, obviously they went through Fortune Builders. They were kind of pointed in a direction for the insurance, but he's like, there's got to be something better. So since 2017 is when Anthony said, look, if you can develop something similar that you do for your home builders, for real estate investors, you'll really take off with these guys. And here we are little over 3 years later, and I've got 175 real estate investors in 36 states. So so it really expanded. And then of course, in the last year is when the whole Airbnb, and Airbnbs I know have been around a while, but it's really taken off in the last year. And when you spoke at Tab 4.0 about your story, what you got into, I had no idea that you could actually do it the way that you're teaching people to do it, where you don't even own the property, but you're going in and hosting with these owners, arbitrage or whatever you call it. So I've had to kind of get up to speed with the area of it, but it's
and that's what I love about you, Mike, is like, it's an insurance agent that when I first started in Airbnbs, I would call and they'd be like, we're kind of looking into it. Yeah, we've been talking about doing it. But Mike was like, no, let me get to the bottom of this, because he definitely helps investors get the type that they need. And so I love that about Mike, that he was willing to learn the style that we use, which is a newer niche, definitely newer, but to really make sure that we're protected the right way. So thank you, and thank you for being here. And I'm glad, and that was another question that I know that we're going to get is, do you only cover people in your own state, or can you help anyone?
Right. No, to that point, I am licensed in 44 states.
Oh, okay.
So, and I could be in all 50 states if I need to. I'm actually working with the real estate investor now in Hawaii, so I'd love to bring him aboard. That'd be a good excuse to go to visit a client.
I mean, you've got to see your clients. Yeah.
Exactly. So that is what makes me a little bit unique with what I do, because most agents work within a territory or an area. So like a lot of agents that are in Raleigh, they're just going to work in the Raleigh area. Same with Charlotte. You might have a few that'll say, okay, I'll go to the Carolinas or I'll expand out. I go where the business leads me, right? I'll go where the referral takes me. And I enjoy traveling. So it's a good combination of, I like traveling anyway.
Yeah.
So yes, I can help people in all 50 states if need be, but I'm licensed in 44 and currently are insuring in 36 states.
Oh my goodness, that's awesome. Well, let's jump right in and give us the overview for real estate investors, and then we'll slowly go niche more.
Exactly. We'll spend the majority of time on the specific Airbnb, but to kind of give the high overview, the issues that we had with real estate investors is they're the hot potato of the industry. If you talk to 10 different agents, they're going to give you 10 different answers, or they don't know where to put you. It's kind of the in-between. So when Anthony and I first started talking, he's like, Mike, is there any way you can develop a program that would be similar to what your home builders are doing? And I said, why not? You know, kind of like your why not me. It's like, why not? You know, exactly, right? That's such a good, so why not? Why can't we take a look at it? So I approached my carriers for the new home building construction with the same data as far as right now, industry-wide, it's taken about 6 to 8 months to build homes, new homes. Yeah. And that's partly because weather. We just have been getting a lot of rain, especially in this area. You get permitting issues. When you have a demand that is far outrunning the supply right now, you're going to have backups. So in the days, you can still have some of your national home builders getting something out in 90 days, but right now it's 6 to 8 months. And when I analyze the real estate investor industry, the average nationally for a full fix and flip, the whole time is 5 months. So yes, you're going to have your wholesales. Yes, you're going to have what you call the lipstick flip, where you're just going to go in, do some carpet and some painting, and maybe get it off the books in 60 days. But those are still not common, right? They're not the common. So when I approached the carriers and said, look, new home builds are taking 6 to 8 months. The average hold time on a fix and flip is 5 months. So really, we were in the same range. Number two, as soon as you frame up a new build, it's empty, right? And it's an attractive nuisance. So one of the questions that the real estate investing industry or the property part is it because it's vacant, or we're going to have theft and vandalism issues, and then it's where in town it's at. Yeah. So if you have the tendency to have like Durham, you know, it's 100. You're getting into 100-year-old, but they're historic. So you got multiple issues. You're dealing with historic houses. You're dealing with houses that are older, and in parts of town that are now up and coming, but at one time weren't, right? So when you deal with those issues, that was the hesitancy with a lot of the carriers to say, okay, we're not going to write in certain neighborhoods. We don't want certain things. So when I approached my carriers and said, look, we should be able to do it the same way. If I've got a new home builder building 10 houses a year, all the way up to 1,500 houses a year, we do a blanket policy covering all their bills. So we don't have to get a separate policy each time. So I approached it the same way and said, well, why can't we do it with builder's risk with the real estate investor? Same way. We'll cover the existing structure, which is the existing house, plus the renovation budget. Talked to my guys. They said that sounds good. Where I got even more unique, though, and was able to stand apart, is the primary carrier that I use is Great American Insurance. And there's only probably 40 to 50 agents nationwide that have access to the residential program. But within that residential program, I am the only agent that has access to write real estate investors on a blanket policy. Oh, all the other guys have to do a single shot or a one per project policy. So that helps separate me and give me an advantage. But we developed the program. So to get back to what we were talking about is for real estate investors, and these are like and Anthony uses his ninja tips, right? I like when Anthony says, well, this is a ninja tip. So I 1,000% would rather a real estate investor use a builder's risk policy instead of a property policy. Property policies have multiple exclusions, multiple issues with coverage, and they have vacancy provisions. So if we let that sink in for a second, all houses are vacant, right? When they're empty, so they're vacant, and you get into a rating and coverage issue with the property form. So I always recommend that you do a builder's risk on a fix and flip. And then if you sell it, the policy just goes away. If you hold on to it, then we get the permanent insurance. But what I see happen too often, Melanie, is people get the property policy, and like we were talking before we came on live, is they get a property policy that's rated as tenant occupied. Well, it's going to be vacant for 5 months. So I wouldn't trust that policy as far as you can throw it, right? Because what's going to happen if you have a claim and it burns down and it's empty?
Yeah.
So there's really a two-step process. The way I do it is I do a builder's risk policy to cover you while you're doing the renovations and the upfit. And then if you decide to hold on to it, we've got two options. If it's a long-term rental, you have to go one direction. And if it's a short-term rental, you have to go in another. So that's where we're kind of funneling it down. So the first thing out of this little segment is I recommend that everybody that's doing the real estate investing part, or they get they get a project that they want to turn into an Airbnb, get a builder's risk policy.
Yeah, and that's why we debated if we should even cover that. But for the listeners, I feel like a lot of people, especially if they are owning it, if you're not doing the arbitrage model and it's an ownership model, then
right.
a lot of times you are going to need that time to fix it and be what you want it to be as
right.
an Airbnb.
Right.
So that's why for the listeners, we wanted to cover what to do during that portion. Okay, but now and you talked about the difference between the property and the builder's risk. Okay, so those are the difference, and you should have. Am I correct? Just the builder's risk in the GL, but the builder's risk is instead of the property policy?
Well, no. So builder's risk takes the place of the property policy. And here's the difference. A property form, if it's a basic property form, it's only going to cover 13 perils. That's it. It's going to be named in the policy if it's a basic policy. And the problem with writing on a property form, when you've got an empty house that is being renovated, you've got to cover the existing house plus what you're putting into it. Here are the problems with the property forms. Not only do you have 3 different types, you've got what's called basic, broad, and special.
Uh-huh.
You just, especially a real estate investor that doesn't know about insurance, they're not going to have any idea what type of policy they're getting.
Yeah.
And unfortunately, a lot of agents don't. And the carriers typically dictate what kind of policy form they're going to get. So it's not like even the agent can decide, well, you need to get the special form, which includes things like theft and vandalism. So half the time I see these property policies that are on a basic form, which is if it's not one of the 13 named perils, we're not covering you. And there's a lot out of 13 things. They will not cover theft and vandalism. And that's an interesting statistic. 95% of my builder's risk claims, whether it's a new home builder or a real estate investor, is theft and vandalism. So they're already excluding the most likely thing that's going to happen to that property. The difference between the property and builder's risk is a property also has vacancy issues where they can come back and say, hey, if it's been vacant for 30 days, we'll take away theft if it's on a better form and not basic. Then after 60 days, we'll take away vandalism. Then after 90 days, if it's vacant, we're taking away all coverage. So there are clients out there that are holding a policy, a real estate, that they think they have coverage, but after 90 days, they don't. And you have to read the policy. And I'll give you another example, Melanie. I had a client in Minnesota that gave me a policy to look at, and right on the declarations, it gave them an amount that was only covering the house itself and not the renovations. So we had a coverage issue there. But when you flipped back into the pages of the policy, had 2 provisions in there. It said, number 1, if the house is vacant, we're not covering it. Number 2, if this house is not your primary or secondary home, we're not covering it. Number 3, if you're doing any kind of renovation work, we're not covering it. So this person bought a $1,500 policy that the first 3 things that was going to be excluded was exactly what they were doing. So that was a useless policy. And
but they're still paying for it.
Exactly. Oh yeah, they'll gladly collect the premium for it if you got 0 coverage, right? So that's kind of highlighting the issues with the property form. But even on top of that, when you're talking about like arbitraging,
yeah,
is there are homeowner policies, even and it leads into a bigger point, but I'm going to talk real quick like remodel. Let's say you were going to remodel your home and you were going to do a 6-month remodel and you guys needed to move out for 2 months to get out of the way. Your homeowner's policy most likely would not cover you while you're out of the house because it's considered vacant. So anytime I have a remodeling contractor, I make sure when they're doing these deals with their clients that they get the homeowner to specify, is your homeowner insurance going to cover you while you're out of the house, or do we need to pick you up under a builder's risk? And it's 50-50. Sometimes the homeowner's policy will come back and say, sure, we need to increase the premium. Sometimes they'll come back and say, no, we won't cover it. And that's going to lead into the arbitrage question later is, even though you go into a house that's not owned by you, if you've got to go in and do any kind of renovations, we would still want to check that homeowner's policy that the owner of that house has to make sure that the existing house is still covered while the renovations are being done, because it would be empty during that time, most likely.
Yeah. Okay. So we're gonna get back into that in just a second, but I want to also cover general liability. So let's talk about that real quick, and then we'll kind of talk about all of them together.
All right, perfect.
Let's talk about the importance of something else.
Right. So the two parts you really have is builder's risk and covers the property itself, the house itself, and the renovations.
While you're doing renovations.
Well, exactly. Right. So you're covering the existing structure plus the renovations that you're putting in. So if the house is worth $200,000 and you're doing $100,000 renovations, you're getting $300,000 of coverage. That way, if it burns down the day before you sell it, that's your maximum value and maximum exposure. That's what you want to be covered for.
Perfect.
General liability is going to cover what happens at the job site, whether it's little Johnny coming in and breaking into your house and he slips and falls and gets hurt and they sue you. It would be me coming to visit the job site, right, as an insurance agent. While I'm inspecting the property, I fall and get hurt. So that's what's called premises liability. And then also you're wanting, now, and again, I won't get too far off the topic here, but this is where it really gets different between what the real estate investors have been getting and what I offer. The real estate investor policies, 99% of them exclude what's called products completed operations, or they just exclude work performed by the subcontractors or the GC. But let's talk about the products completed operations. You have two areas of what's being done by the contractors. Products covers the materials, right? So that would be the piping used by the plumber. So products would cover when the plumber uses defective piping. And then completed operations is the workmanship. So you have two aspects of a general contractor or a sub when he's doing work for you. It's products that he's using, and it's the completed operations, the work that he's doing. So you can have crappy materials and crappy workmanship, sometimes both.
Yeah.
Right. So unfortunately, the real estate investor policies, 99.9% of them don't cover that. So you're completely bare for any of the work that they're doing. Also, there's the exclusion of no work performed by subcontractors. So even if you have products completed ops coverage, if they put the endorsement on there that said no work performed by subcontractors, well, guess what? You're completely on your own. And most real estate investors don't realize that. You'd be surprised how many home builders don't. I write home builders every week. Some of them as many as 200 homes. They've been building 200 homes a year, year after year, and had no coverage for the work done by their subs. It's mind-blowing. So to kind of go into that just a little bit more and drill down a little bit more is my programs give you the proper coverage. And I'll go, there's 12 reasons why you don't want to rely on your general contractor or your sub. I won't go into all 12 reasons, but I will go over a couple. Number one, they're not the best at paying their bills, right? So at the time you have a claim might be when their policy's in cancellation for non-payment of premium. You will never know. They are not obligated. The insurance agent is not obligated to tell you that your client doesn't have insurance. The certificate of insurance simply tells you that on this day, when you ordered the certificate, that they were in good standing, but there's no obligation by the agent or the carrier to let you know that the sub hasn't paid his premium and he's canceled. So you'll be the last one to know. So that's number one. Number two is subs. Right now in a market like we have now, subs are subbing. So you sign a contract with ABC Plumbing, and unless you're at the job site 24/7, let's say he decides to sub it out to his buddy at XYZ Plumbing. So XYZ Plumbing actually does the work, but you get the invoice from ABC. You'll never know, right? He won't necessarily tell you unless we have a claim, and then he'll come back and say, well, I didn't do the work. And you're like, well, that's not good, right? So you get in those issues, but here are the two that I really highlight. You would be surprised how many subcontractors and general contractors are doing work on your project that don't have coverage for the work they're doing for you. I'll give you like roofing. That guy's coming in and doing roofing work for you. Now, a certificate of insurance is just going to say he has general liability coverage, right? It's not going to say what his policy covers and doesn't cover. And I've had this happen before to one of my larger builders. They needed some roofing work done. They had 10 closings that they needed to get done. A storm had come through and done some minor damage. So they had to go get a substitute because his roofing contractor couldn't come out. So they said, hey, Mike, we'd like to use another sub to do this. And when I questioned that, I said, well, we really need to look at their policy, not just their certificate of insurance. Well, the guy didn't want to give his policy. That was kind of a red flag. But when he finally did, and on page 55 of his policy, he had a roofing exclusion. So if that subcontractor had stepped onto my client's job site and done about $100,000 worth of roofing work on those 10 houses, if there had been a claim, there's no coverage from that sub that did the work because his own carrier would say, you can't be doing roofing. So ninja tip number two. If roofing is not in the name of the company you're dealing with, they may not have roofing coverage. In other words, if you hire ABC Roofing Company to do your work for roofing, there's a good chance they have coverage, right? Because you can't hide the name. But if you're ABC Handyman Services and can be doing anything, right? He's probably got a policy that's written as a handyman, which could include anything. But the way that policy is rated would be, well, he's an odds and ends guy. It might be covered under a carpentry code, but they're still going to have that roofing exclusion in there. So
what do you recommend to people? Like, are we supposed to read the 100-page, like we're supposed to ask for the full, not just the certificate? Or the full?
Perfect question, because here's why. Nobody has time to do that, right? You do the best you can. Here's how we address that issue. When you don't have the proper coverage yourself, the burden is on you to do all that, right? Because you're like, oh, all my subs are covered. The way we help you alleviate that is we rely more on the subcontractor agreement than we do the certificate of insurance. In the courts, your subcontractor agreement or GC agreement will always trump the little piece of paper that just says they had a general liability policy. Why? Because that 3-page subcontract agreement outlines very specifically the type of insurance that they're supposed to be providing you, the limits, what kind of coverages you expect, and it's implied in the subcontractor agreement that, hey, the scope of work, because that's usually part of the agreement, right? So when you give that GC the scope of work and it lists he's going to be doing roofing and plumbing and electrical and HVAC, once he signs that subcontractor agreement and acknowledges that work includes roofing, if that guy goes out and screws up on the roofing, and then you go back and sue his insurance policy for the damages, you'll probably get the insurance carrier to step in and pay, but you'll now make him personally liable for it. But the good news is our policy will step in and pay, right? So you're doing the best you can. We're going to make sure this guy has everything he wants or we need, but we step in behind as a buffer. So in the event they don't do all those above things that they should be doing, we will step in and take the place of that sub and provide the coverage if we have to. We're on an excess basis. We don't want to be primary. And I believe the last one, and we'll be done with this subject, the biggest issue, the biggest one that I talk about, it's not they sub, they don't pay, they don't have coverage for what they're doing, is sometimes you have a claim and you can't prove who did it. So I don't know if you've seen, well, it's that commercial you saw at Tab 4.0, right?
Yes.
One with Gene and Gina, right? So where the sewage came into the house. You had the wife in the kitchen, the husband in the shower, sewage came into the house. What we determined, going backwards, was the pipe that was laid by the city, which was then hooked up by the plumber, which was then the driveway filled in with concrete. Somewhere along the way, that pipe got cracked. So when the concrete guy filled in the pipe, this was just a ticking time bomb. So everything was done. You don't see anything. So day after day, when they were using their stuff, it eventually, I wasn't right at the 90-day mark, but it was close. Okay. And the next thing you know, stuff's going everywhere. So in that particular case, what we had to do is go back and look. Does the city of Charlotte say they put in bad piping? Of course not, right? Does the plumbing contractor say he saw a crack in the pipe when he was hooking it up? Of course not. Does the concrete guy notice that there's a crack in the piping when he's doing his work? Of course not. We determined the most likely person was the grading contractor that had come out there to get some landscaping ready and leveling out the yard, probably ran over in the truck and cracked the pipe. Mm. But how do you prove that? Because any number of people could have been going back and forth with the job site. So in that particular instance, our client had certificates of insurance and a signed subcontract agreement from all parties, but we couldn't determine who was at fault. So what happens there? Well, when the homeowner is getting their direct writer homeowners policy involved and having them come out, well, then they're going to subrogate back against our builder, right? Which they did. So our builder, thank goodness, had the proper insurance, and that turned out to be about a $30,000 claim. Okay. So everybody had insurance, but we couldn't prove who did it. So if you have a real estate investor policy that excludes work done by the subs, and you don't have any coverage for anything that they're doing or what you're doing, that would have been $33,000 on the client. So that's why it's very important.
Okay. So now, just before we really dive just into the short-term part, like we said, we wanted to talk about this because even at the beginning, you might be doing renovations, but what about, Mike, when they've been running an Airbnb for 2 years, and then they decide they need to do a 1 month renovation? What is that time limit that they need to call and get a different insurance policy?
Right. Well, so let's say you've got a client that's already set up, already owns the house. Let's assume they own it, right? Okay. They own it and they're Airbnb in it, and they've got a home. When I call it a homeowner's policy, they've got what's called a lesser's risk of homeowners, just like a fire policy, just like it would be for their main primary house. What you would want to do there is first you would call that company, right? So let's say that's written by Allstate. You would call Allstate and say, look, it's one of our properties, you insure it. We are going to do a major, $50,000 renovation. We're going to redo the kitchen and redo a couple bathrooms. Most likely, if you're going to be done in a month, most likely 9 times out of 10, they're just going to say, great, you're good. We may need to bump up the value of the house now because it's going to be worth a little bit more, but you're covered. That would be the first person I would call. If you get to that insurance company that kind of says, well, we're not really sure what to do, then you would ask them to say, well, okay, are you okay if it's vacant? Because again, it's an Airbnb that's normally got people in it, but if it's going to be vacant for a month, are you okay if it's vacant while we do the renovations? And then they will probably say yes. And then what you can do there is if they say we don't want to cover the renovation, you can just get what's called either a builder's risk or an installation floater. There's a way to write a little short term. Let's say it's $50,000. You can write a policy for that. But I would say 9 times out of 10, if it's a 30-day deal, you just call the existing carrier. Now, we're assuming that carrier knows it's an Airbnb. See, that opens a bigger can of worms. I can't tell you how many clients, well, I've got a homeowner's policy, and again, that's great, but the carrier doesn't know that it's a short-term rental because there is a big difference between a long-term and short-term rental. So they may be opening a can of worms, but I would rather address that can of worms because you wouldn't want the carrier to come back and say you don't have coverage, or you were. And what I mean by no coverage, most likely they'll pay the claim and then they'll cancel you, and you'll never be able to write with them again. But sometimes they'll use that fraudulent, that you gave fraudulent statements. You misstated what this house was for. So in that particular case, you're probably going to be okay. Where you really get into the gray area is, let's say like we were talking before going online, let's say you want to make a theme of your Airbnb.
Yeah.
And it's going to take you 3 months to get it completely retrofitted and done. When it goes vacant like that, again, the first is to go to the existing carrier for that. You'll probably have to write a builder's risk for that 3 months to cover the gap.
Okay.
And then that permanent policy just come right back online.
Okay. Okay. So that was kind of a perfect lead in. Let's go into now, if you own an Airbnb or you own a property that used to be a long-term rental and now you're turning it into an Airbnb, what kind of policy do we need?
So, and you actually helped point me in the right direction with this too, is even just a year ago, I would say not 90, I hate giving percentages, but the majority of insurance carriers, whether they were a direct writer or an independent agent like I am, most of the carriers did not want to write short-term rentals. No problem with long-term rentals. Again, you've got markets that will write homeowners all day long. And then if it's a rental, it reduces that market a little bit, not much. Most carriers don't have a problem with long-term rentals. Well, what's really changed, as you've seen, because it's different with every state, every county, every city. I mean, it really drills down, right, to how they treat Airbnbs. But it's the liability, it's the exposure of having different people on a daily basis in your house. So you don't have the consistency with, okay, well, who's turning on the stove? Are they partying? Is it a college group? Is it a bachelor party? Whatever. So when you lose that kind of control, the exposure goes way up. So you have homeowner insurance carriers here, you've got the long-term rentals, and then it goes way down here off the screen. You can't even see how low that number is, right? So there's not many that'll handle the short-term rentals. Yeah. Now, I've had a couple carriers since come back, like Auto Owners is one that I use. They just recently announced, well, we don't have an issue with the short-term rentals. So if you own a house that you're now going to turn from a long-term rental to a short-term rental, you must call your agent, whoever it is, because if you've got a Travelers or an Allstate and they don't know that you're transitioning it, unfortunately, people don't want to call to get the bad answer, but you would rather call them and disclose what you're doing, right, than conceal the fact. Because if you don't let them know that that's what you're doing with it, they can come back and there can be some serious implications all the way up to denying the claim. Yeah. So if you do transition from a hold into a short-term rental, you absolutely contact your existing agent. And if your existing agent is not able to address it properly, then I recommend they either call you or me, right? Because we can point them in the right direction. I mean, it really is that simple, because it is a very specialized area of insurance.
Super specialized. When I started doing it, I think I called probably 30, and people kept on saying, oh, try these people, they do it. Try these people. And they didn't. The only person I could find at the time, and if you've taken my course, you know that I started using CBiz, CBIZ.com. And that's what I started with. And now you can also go to Mike also for that, which I love. Okay. So that's for if you own it. Now let's go to arbitrage. Let's kind of stay as the owner. Okay. Is it okay if we kind of do it backwards maybe? Let's stay as the owner, because I can see somebody on here, hi Sony, that I run their property for them, but they are the owner. So what should they have? And it's a little bit different because, and somebody wants to run your property for you as an arbitrage. What do they have?
Well, the best way to address that is the same way I have some real estate investors that will take ownership of the house, right? Because someone's behind on payments. So they acquire the house where they technically own it, but their name's not on the deed, right? So the deed is still in the homeowner's name, but my client then comes in and they do title paperwork, right? So there's a difference between a deed and title, but you can still have technically dual ownership legally. You see what I'm saying? So the homeowner's still on the deed, and then you legally have rights to that house having some title interest. So I would do the same thing for the Airbnbs that I do for these clients. And my recommendation on those is both of you have a policy. Here's why. You just do not want the homeowner carrying a policy And then when it comes time to the house burns down, and you've got my real estate investor client over saying, hey, I've got an insurable interest in this property, that homeowner's policy may come back and say, because technically, and here's why, you technically can't add my client's name onto that homeowner's policy. See what I'm saying? It's very difficult to have, while both have an insurable interest in that property, it's difficult to get that homeowner's policy endorsed to add my real estate investor, because they're like, well, he's not, is he paying the mortgage? Well, he assumed the mortgage. So it gets tricky, right? And then you don't want my client saying, okay, you can cancel that homeowner's policy, but then you got the bank, right, sitting there saying, well, we got to have coverage. So then you get the real estate investor that gets the policy. Well, his name's not on the deed. He's only on the title. So you can get into a fight. And I've clarified this with several of my insurance companies, because I do some of these for my real estate investors, this exact situation. So my advice there is the homeowner that owns that Airbnb should have a policy, right? Their own policy with their name on it, their address, whatever carrier it is, and they need to disclose that as a short-term rental. They must do that.
What's the name of that type of policy?
What's that?
What's the name of that type of policy? It's not a builder's risk. It's not a property.
No, homeowner. It's just a homeowner.
It's just a version of homeowners.
Yeah, exactly. It's a version of a homeowner. See, homeowners is like your primary residence, but let's say you own 3 other properties. I sometimes I call them lesser's risk only, LROs. Fire policies are interchangeable. So it's another form. It's going to look just like a homeowner's policy. It's the same thing. It's got the limits. You got liability built in. But they have the insurable interest in the home through that policy. So in that situation, I recommend they have a policy and you have a policy. So it's both of you, because you got to protect both your interests. And what I would rather do is those 2 carriers fight it out and point the fingers at each other and decide who's going to pay, knowing that we've got coverage, right? We've got coverage. I just can't answer, as we sit here right now, which carrier would step in. It's always a wild card, right? And then what usually will happen there is they may just say, we'll share in the loss, right? Obviously my client, my real estate investor owns it, but his name's not on the deed, but he's got an insurable interest, so we'll pay half if you pay half. And fortunately, I've been doing this for probably, again, 3 years, so I haven't had one of those claims occur, but I've clarified it with carriers that that's their best advice. Both of you need to have a policy.
Okay.
So you don't want to call it over-insuring. I call it making sure I call it CYA, not over-insuring, because we don't know ultimately who will pay.
Yeah, it's not like medical insurance. I had a bad experience with medical insurance that we had too much, and it was was terrible, because then we're hitting 2 deductibles. But this is a totally different policy.
Yeah, right. So both of them have a policy.
Okay. Now, a reminder, if you're listening, if you're on, make sure you're using the chat if you have any questions about anything that I might be missing. I'm seeing a couple things come up, but make sure you're writing in your chat what other questions you have. Let's see. One question is, what type of insurance do you need if you have an Airbnb in your own home where you live?
Right. Good question. So I have a client in Nashville, Tennessee that actually that's what they've done. It's right in downtown. It's a super nice place. They took the existing house and renovated it and Airbnb it out full time, and then they built their 3-story house in the back, which is their primary residence. But they've got a 1-room Airbnb and a 2-bedroom Airbnb in the back of the house. So they're running 3 Airbnbs out of one.
That's awesome.
And their main house pays for all of them. It's insane. And in Nashville, Tennessee, there's no down season. You know what I'm saying? It's not seasonal. It's year round. It's a destination place. The only time I see a downtick is from December to March. But from March all the way through, I mean, that house, that 3-bedroom house, they're getting $650 a night with a 3-night minimum. 3-night minimum, and it's booked almost the whole from March all the way through. It's insane.
Oh, my word.
So to answer that question, again, if your primary residence is an Airbnb, you better let your insurance carrier know. Again, ignorance isn't bliss. In concealing it from the carrier, I'm going to tell you, but maybe you know what the answer is probably going to be. They're going to call their agent and say, I'm running an Airbnb out of my house. They're going to freak out, right? They're going to be, oh my gosh, there's no coverage for this. But it's better to know now than when you have a claim, right?
Yeah. And just to add to that, because just to really, really clarify, is that yes, it's not the fear of it being vacant because you live there, right? So you don't have that fear. However, once a claim comes and it really gets down to, well, who was there when the toilet started overflowing, when all this happened? Well, this person, they will find out. And so we highly recommend just cover yourself the right way. Talk to Mike, talk to CBiz, whatever it is, but make sure that you're covered the right way.
Right, absolutely. And again, I go back, insurance carriers have a reputation of, well, they don't like to pay claims and we overpay for our insurance. And the reality of it is some of our reputation is earned, right? Because but it would be cases like this where things just weren't communicated or clarified. And it is absolutely within the right of the insurance carrier to say, hey, you did not disclose what you were doing. And I'll give you an example. You said you were a milk manufacturer, but you're actually manufacturing dynamite. I mean, that's a huge change in exposure. And just because you didn't tell the carrier doesn't mean the policy, they can come back and say that is a material misrepresentation and they can't absolutely prevail because and it's not even that they wouldn't insure it. A lot of times they wouldn't. It's not getting the proper rate and premium for the exposure. So,
so as long as you just know that you are risking not having coverage if you know that it being avoided, then okay, that's a whole different ballgame if you want to play that game of just being, you know.
I'd rather pay more to know I'm covered than not tell the carrier and get my $500 premium and think I'm getting away with something or I've got a good deal.
Yeah.
You know, unfortunately, and here's the thing, and I will say this real quick. Here's one interesting point, the difference between a broker and an agent. An agent like me has binding authority with the insurance carrier. So my duty is actually first to the carrier. So when I have a client, it's dual, you know what I'm saying? I represent your interest, Melanie, as much as I do the carrier. But if you disclose something to me about what you're doing with your operations, I'm contractually bound to my carrier to let them know. So if I'm dealing with that milk manufacturer and he says, well, we're really manufacturing dynamite, it is my duty to tell the carrier. I have to, or I can even get in trouble. So,
and I love that because I love that anything I tell you, you're going to make sure that I'm doing it the right way because you have
absolutely.
to tell you know,
if it costs you more and it's harder to get, I'd rather know you're covered than not. Whereas a broker has their contractual liability to the insured, but they don't have binding authority. They never have. So they don't have that duty to the carrier. So sometimes you get the conflict. It's more semantics than anything. But the point I'm trying to make there is anything that the homeowner or Airbnb or client like you, if you disclose anything to your agent, I'm legally bound to disclose it to my carrier anyway. So if you're passing along information and I just say, don't worry about it, you're covered, and I don't send it on to the carrier, then we're both going to be in trouble. So I just don't mess around with that. I'd rather you pay more to know you have coverage than take a risk.
Yeah, and when we say more, it's not like it's going to cost you $1,000 a month. It is a little bit more, but it's not like, you know. At first I was like, oh my gosh, is it like 7 times more? No, it's not. It is more. I don't know. You know a number?
You know firsthand, like you said, a year and a half, 2 years ago, anytime something is new, it's going to be more expensive. Now that people have gotten more comfortable with it, you've got more carriers entering into the market, the rates are not substantially higher. And in fact, Melanie, a couple times I've seen the premiums didn't change at all, but you're disclosing to the carrier what their risk is, and it's up to them. That's all we're trying to do there, is let them decide if they want it or not.
Okay, so now let's talk about with arbitrage. I'm not the owner. Okay, so what kind of policy? It's just another form of an LRO, right? Or what do you think?
Yep, right.
Okay.
Same thing. So you've got the one where there's the dual deal. You've got the one where you own it. Which one are we talking about now? Because I thought we covered pretty much.
So we talked about, as arbitrage, so if I sign a 1-year lease with a landlord.
Okay, you're the one, right, okay. Yeah. That would be the same way as the other way around, right? I would recommend you have a policy and they have a policy, right? So you're saying you're the owner and you're giving someone else the rights to Airbnb it? Is that what we're talking about?
So I get this question a lot. Like so the landlord has a policy to cover the property, right? And I get to, like, I don't really care about the stuff sometimes, like depending on the level of the Airbnb, like I don't really care about insuring the stuff. So do I even need a policy other than my general liability policy?
Well, it's a good question. And in that particular case, right, because the landlord's going to cover the house itself, so you're not responsible for that. The stuff in it,
Yeah.
that is more of a cost of doing business or risk, right? And if you just say, look, I've got $8,000 worth of furniture in there, and I don't care if it just gets totaled after a couple of years, it's probably paid for itself. Do I need insurance for that? The answer to that is you don't have to, right? It's not, unless you owe money on that, the lender makes you get it. That's a good question. You absolutely want your own lesser's risk liability where you just have general liability to cover. You're not covering the structure, but there are ways to do that. If you came back and just said, hey, Mike, if I just want to, let's say I've got $50,000 worth of furnishings spread out among 5 houses.
Yeah.
And I just want to get a policy for it. We could write a policy like that for probably $300 or $400 a year, not even have to specify which location it's at. Because again, what are the chances you're going to have all your property trashed, right? It's most likely going to happen at one. But there is a way to address that.
Well, I'm so glad we had this conversation because I don't think I have one of those. And that I've always kind of been like, I don't really care. It's $8,000 to $10,000 worth of furniture.
Right.
When you have 15 or whatever properties, that who knew? So let's go back because you brought up something that I want to talk about of that blanket. So with the general liability, something that we need to talk about is that can be a blanket policy. You don't have to get a GL, right, for every single product.
Exactly. Right. Yeah. Well, it's right. Yeah. And that was the other thing that I saw. Even when I saw a real estate investor getting this decent policy, what was happening as soon as they were done with the project, what did they do? They canceled the policy. So general liability has to be a continuous coverage to answer future issues based on past work, right? So let's say you got that GL policy for that project that you did, you're done in 5 months. You're only getting coverage for liability during the 5 months you were doing the project. If you cancel that policy and 2 months after you get done, then you have a plumbing issue or you have that issue where coverage is in question. If you don't have a policy enforced, they do not have to look back and cover you. So what you have is a general liability policy that's just covering your operations as a whole, and it's a continuous policy. We'll list the locations to give you the specific for that location, but it is a blanket policy covering all your locations. And yes, you'd rather have that than an individual. And leading into that, if you're a real estate investor that's going to do 5 or more projects a year, whether it's an Airbnb or fix and flip, we do the same thing. We'll give you a builder's risk policy that just says, hey, we'll give you up to $500,000 for any single house, up to $1.5 million for any renovations, and it's one policy year round. The good thing about that, if I write you a blanket builder's risk for that operation, I can give you $10,000 of model home or staging contents coverage built into that policy where we don't have to write it separately. But to your point about blanket, it's year-round continuous coverage versus having to do it each time. But leading into that, another advantage of I am not always the least expensive as far as pricing, but the carriers I work with can write your properties on one policy. In other words, instead of getting a separate policy like you will for most, we build you a master policy, right? So you'll have location 1, and then when you add one, we add it on. And then add it on. It's just an additional premium. You'll still know what each property costs, but we just add on to it. My largest property client's got 180 locations. Imagine trying to write 180 policies, right? We've got one master policy that we just write it on. So that's another. Now, again, I may not be able to beat a direct writer, but me personally, I'm just talking about me personally. I'd rather have one set of paperwork than 50 sets of paperwork.
Yeah.
I can't operate that way. I need it as clean. So if I'm going to pay more to have one policy, I'd rather do that than have multiple.
Yes. So just
and that's just whether it's a long.
Yeah. So a blanket, you can do a blanket general liability. You can do a blanket builder's risk, but when it comes to your LRO or your homeowners, then it's by property, correct?
No, I can do that on a blanket as well. Like I said, so let's say you have 2. Yeah, let's say you have 10. Now, again, if it's a long-term rental, it's easier, right, for me to have like a carrier that can just say, okay, add to it. So even some of the people that you know from TAB, I've got a blanket policy for them. They just add and delete those properties as they get them. On the short-term rentals, it's easier now than it would have been a year ago. A year ago, you'd probably just be getting a separate policy, but I recommend, again, just a blanket, right? Have one policy, you just add to it, you pay a little bit more premium. I just don't like this. For me personally, I couldn't handle all these policies. So blanket is possible on all these things we're talking about.
I didn't even know that part. That's awesome. Okay, so now let's talk about, are you familiar a little bit with what Airbnb, like people sometimes, like, oh, I don't need insurance. Airbnb has an insurance policy.
Look, yes, so I read it. And look, here's, we went online and actually read the policy, printed out a couple of the pages here. Let's put it this way. The way I look at this coverage, now, how do they just take it out of the fees that they charge you guys when you do an Airbnb? How does this work?
It's considered part of our fees that they automatically take out. So they don't even call it an additional.
Right.
Yeah.
Right. So the easiest way to answer this question is, this is not bad coverage. This is liability only, right? This doesn't cover your existing property. So when you read through this, they're going to give you liability for some of the issues we're talking about, right? Lawsuits where somebody goes crazy at a bachelor party. Is it good coverage? Yes. Who knows how much you pay for it, right? Because it's in that fee. So we don't know how to unbundle it.
Yeah.
I suspect because it's a huge master policy that they write behind the scenes where everybody's sharing in the limits, I would expect this not to be expensive at all. So with this, I look at it and say, hey, if it's included and they're offering it, I would take it all day. Even if it was $10 a night, it's good to have, but it does not take the place of it. And the reason why you hear clients say that is when I read their language on there, they're like, hey, our coverage is considered primary and you don't need other coverage. And to that, I say, I wouldn't do that. I would not do that. But if you own the house and you've got a homeowner's type of policy in place, your property and liability are built in anyway. Like your homeowner's policy, it'd be written the same way. When your homeowner's policy, you get the property and liability built in. You can't take one or the other out. You know what I'm saying? When you get a homeowner's quote, you're automatically getting coverage for the house and then $300,000 of liability, right? It's already built in. If you take it out, it's only like saving $10. There's no reason to take it out. So for me, I wouldn't depend on this because, and honestly, I bet a lot of the guys that say, well, I've got this, I don't need the other, they probably already have it in the other and they just don't realize it. Because again, if you got a homeowner's or a lesser's risk only policy, it's got liability built in. Now, do I think you would have a coordination of benefits issue like you had with health insurance? And that's where I would say, since they are advertising that they're primary, that if you did have a claim, most likely we would want these guys to step up, right? Airbnbs, because if they're claiming to be primary, that means your homeowners would be excess. But guess what? They can't step out and say, we're not covering you, right? So I'd rather have, most likely they have both and don't even know it. But I would not rely on their liability only because they even specify some of the things they wouldn't cover that a homeowner's policy would. And again, as long as you disclose to that homeowner's carrier, this is a short-term rental, they're okay with it. We don't have any issues.
Yeah. And that's definitely what I would want to highlight is just as long as you're aware when you read through the Airbnb policy, what it does not cover to see if that's in your LRO that you already have or whatever you have, then okay. But just make sure you know between those two or if you need to add another one.
Right. And sometimes there's going to be no coverage by either policy, right? There's always going to be some like the 19, right? I mean, there's just not. You know, they specify a couple things. Well, they specify in here like mold and mildew. Well, mold and mildew is included under a homeowner's form now, right? You get, I think, $5,000 of coverage built in. So they won't cover mold and mildew, but they're also not really designed to cover property damage. This is a liability only policy that they're including. But like I said, but they also specify too that business interruption isn't included. Your homeowner's policy will give you some of that interruption, business interruption. If it's you know, it's got to be a property related. And I'll touch on the COVID-19 why it's not covered. Business interruption is a property related issue, right? So if your Airbnb burned down, you want the coverage to build the house back, right? But let's say you lose 3 months of rents. That's what the business interruption is. Well, if the house burns down, that's a direct physical loss to the property. You're covered.
Yeah.
Right? Or let's say, here's your Airbnb and next door, this house burns down, and let's say the government, civil authority comes in and condemns this house, but says your house is too close, we're going to condemn the whole area, right? In other words, you can't use your house until we get this house taken care of and cleaned up, which could be 3 months. That's what's called civil authority. Where people were trying to tie into COVID-19 is, well, the government tells us we are shut down, right? We don't have a choice, but we also didn't suffer a loss to the property. So all the coverage forms out there have an exclusion for virus and bacteria, and then business interruption is tied directly to the property. You must suffer a loss to the property. Well, the virus didn't cause the loss. Having said that, just good information here is in 1969 is when FEMA developed the National Flood Program, right? 2001 is when TRIA, terrorism coverage, was put into place. I would bet $1,000 right now that within a year or two, we'll have some kind of federal virus protection coverage that'll come out. That'll be, like TRIA is added on.
Yeah.
And if you need to get flood, the insurance carriers, I'm sure, are going to lobby to say, look, we need to address this because it is an issue that could happen again.
Yeah.
But we can't cover it under the existing policy. I don't know if you saw, within 3 weeks after this came out, a restaurant chain, a French restaurant chain, sued their insurance company for exactly that under the business interruption. They're not going to win that case because it just isn't in there. If they win that case, then you're probably talking $200 billion of claims that insurance carriers would be paying that they're not supposed to pay. And if people think the insurance carriers should, well, then they've just cratered the insurance industry. And then now your homeowner's premium will be $3,000 a year instead of $500. So you'll win the battle but lose the war. So in this particular case, it was a learning curve, but I suspect there'll be some kind of coverage added in. But I didn't want to get too much on a tangent, but that's where I'm going back to this. Is there some things you don't get covered here that your standalone policy would? I would keep both and don't rely on this.
Yeah. Okay, so now let's talk about, if you're in my course, you know that I talk about, you get your bookings on Airbnb, but then if they ever come back to the area, you want them to book through your independent website, okay? Saves on fees and everything. So with that, where I don't have the Airbnb policy, I mean, what recommendations do you have for that?
Exactly. That's where you 1,000% want to make sure you have your own standalone policy, because if you're not going through Airbnb, you're hosting yourself and booking it through your own website. That's just why having that separate policy is still important. So, and again, are most of the issues addressed through the homeowner's policy, right? So if you did just have 4 homeowners or lesser risk policies that had liability built in, would that be good? Yes, and you would need it because you don't have this sticking in for you. But what you've done is gotten you a separate master general liability that just kind of says, I'm covering all my operations outside of these individual policies, because you're just really doing a CYA. And it's not terribly expensive for you to do it, but there are loopholes in some of those policies where mine might step in. But worst case scenario is you're getting that extra protection, because who knows what, we could spend all day trying to come up with all the situations of what could happen here.
Yeah. All right, guys, anybody else have any other questions you want to put in the chat before we wrap it up? Mike, let's see, I had one more question about, so because we get asked so many times about theft and vandalism, if it's to my stuff, I've already made that choice of if I want to insure my stuff or not. If it's to the house, what was it, the Airbnb coverage? Was it what do you recommend?
Right. The theft and vandalism is a property-driven coverage. So you would want to look to your policy that gets issued, right? And again, a lot of rental policies, right? So if your homeowner's policy, your primary residence, you don't have to worry about that. If you're renting on a special form, which is 99.9% of the time, you're fine. The problem you'll see with some rental company policies is they will exclude the theft and vandalism, either just based on the location, or they just say, look, we don't want to have the hassle. The insured is just going to be a cost of doing business because, again, when you got somebody else living in the house that you own, how do you know they just didn't steal the HVAC and sell it for, $100 worth of meth? We don't know. So it's probably, I don't want to give a percentage, but I would just look at your policy to see, are there carriers that will offer it? Yes, it might cost you a few bucks more, but that would still be covered under whatever that property or lesser's risk policy you have. Is you would look to see if it's a basic form, there is no theft or vandalism. It'll say on the declarations what it is, basic, fraud, or special. And then if it doesn't say that, somewhere in the policy it'll say whether or not it's included. But again, save your time trying to read that 100-page policy. Just call your current agent and say, hey, am I covered for theft and vandalism under this policy? And if I'm not, can I get it added on and pay more? And if not, is there another carrier you can recommend?
I love it. I love it. All right. We don't have any other questions coming in. So Mike, where can people find you? Where should they go?
Perfect. So I have my own direct website. It's just www.mikestelljes, one word, and it's STELLJES.com. So that's just, my website's just more a credibility piece. You know what I'm saying? It doesn't drive as much traffic, but it just gets people in there to learn more information. I address a lot of these topics. My commercials are posted in there. Some of the other podcasts. So that's the best way to start gathering information. And then of course, my cell number, 704-779-1582. And then email address is just mstelljes, STELLJES @ LOWRYASSOC.com. So mstelljes @ LowryAssociates.com. And that's it. And I really appreciate you having me in.
Perfect. Thanks so much, Mike. It was great to catch up, and thank you so much for your wisdom. Hope you all enjoyed it.
All right, thanks. Bye-bye.